at least has come to an end. Was it a happy July for you?
James, it was a fantastic July. We saw volumes quite light, but in terms of performance for the month, we actually saw the market gaining 5.2%, and it was gains across every single sector with just one exception, and that was the information technology space. I think one of the main themes that we saw during the month was the falling Australian dollar and the bounce back also in commodity prices. We saw a good month for iron ore prices as well as gold prices, and that really saw the material sector coming back into favour. That area was up by 9%, followed by financials, which was up by 6%, and the energy space also up by 6%. So really what this meant was that we saw the iron ore miners doing well and the gold miners bouncing back very strongly. In fact, the gold sub-index up by a massive 27% during the month, and we saw stocks like Oceana Gold, Northern Star, Medusa, Resolute Mining all gaining more than 40%. On the flip side, though, there were some big moves, and the big ones that come to mind are McMillan Shakespeare, which was down by almost 50% on the back of some of that uncertainty around the fringe benefits tax. But on the upside, Billabong having an absolutely stellar month, up by 170% after that debt restructuring. So all in all, it was a pretty quiet month in terms of volumes, but in terms of performance, it was a phenomenal month.
Can we keep it going into August, Julie? I mean, what does the short term hold for us?
And I guess that's the key, to see the momentum going. We really want to see some earnings growth coming into the Australian share market. Over the last 3 years, the lower commodity prices and the falling commodity prices means that we haven't seen earnings growth coming out of the ASX 200, but that is forecast to change in the current financial year. So if we do start to see earnings growth coming into the picture, well, that's going to start the view that we have turned in terms of the cycle. So I guess we have been at a cyclical low for those cyclicals for quite a long period of time. Hopefully that lower Aussie dollar as well as lower interest rates really starting to kick in, and we'll start to see earnings starting to rise, and that's going to have a positive impact in terms of some of the cyclicals. We've slowly started to see a little bit more confidence coming into those growth sectors, but this earnings season is going to be key, and we're watching forecast earnings growth for the ASX 200, which would be a positive in terms of how people strategically allocate their portfolios. So we'll probably see a shift more from some of those higher yield income type stocks into some of those growth and those cyclical plays if we do see earnings growth being forecast as financial.
Firstly, Incitec pivots, announcing off the back of a strategic review, a split in terms of their global manufacturing operations. Your thoughts on the announcement and on the stock itself?
Well, back in July, we saw the third outage for Incitec pivot at its Phosphate Hill ammonium plant, and this really led to, I guess, a production-led downgrade for Incitec pivot and sparked this strategic review. So seeing the results of the strategic review now coming in, and it does look like the president of the global manufacturing space, Bernard Walsh, he's going to step down. Not only that, we will see the division being split into two functions. So one is the technical aspect of it and the strategic, so that will incorporate the engineering and project management, and secondly the operational part. Really what we want to see is an improvement in this ammonia plant. We haven't seen this ammonia plant really running at a full rate, and so the market's going to wait to see whether we do see the run rates coming out of this plant improving on the back of the strategic review that's happened. But really, in terms of this Phosphate Hill ammonia plant, it has been really disappointing, and this strategic review is all about turning around that performance and hopefully turning around that cycle of earnings downgrades that we've seen on the back of that.
Out of WA. Talk about ending the month on a positive note. Their shares closed up 28% or so today.
Clough doing extremely well. The stock code CLO, and the stock up a massive 28% today. Now this is a company in the mining services area, and one of those that's really bucking the trends. Back in June, this stock came out with a profit upgrade, which is rarely heard of in that mining services space these days, saying that EBIT was going to come in around $90 million on revenue of $1.5 billion. So it is South African focused, so a South African contractor, Murray and Roberts, have made a takeover offer at $1.48 for Clough. Now the shares rose 28% today to close at $1.43. It is a tough sector, but it's nice to see a bit of corporate activity coming in there, and that helped to boost the performance of some of the other mining services companies out there on the market.